Hi, welcome back to Digital Defense. This is your weekly cybersecurity show with your host, Jordan Robertson. I'm a cybersecurity reporter here with Bloomberg News in the Washington, D.C. Bureau. If you haven't seen the show before, this is an interactive show. We welcome your questions and comments, and I respond to as many of them as we can get to live, talking about topics, cybersecurity topics, tips and tricks of the week. And if you're watching on Facebook or Periscope or the Bloomberg terminal, the way to communicate with me is just to leave your questions or comments in the comment section, and we'll get to as many of those as we can. Let's just dive right in. This week we're talking about Equifax. Equifax is, one of the most significant data breaches, really in the history of data breaches, and there's a lot to think through, as consumers, as watchers of corporations. That I want to walk you through some of the things that I'm thinking about for myself and for my family as we try to figure out how to respond to this breach. So let's just dive right in. So Equifax, last week they announced a massive data breach. 143 million consumer accounts were breached. We've seen numbers bigger than that before, but most companies don't have the data sets that Equifax does. Equifax is one of the three big credit monitoring services in the United States, which means that they have, basically the full dossier on you. If you have transacted with the modern economy, if you had a credit card, if you've lived in a house, if you've paid a utility bill, your information is going to be there. The information as we know it that was stolen was Social Security numbers, which is kind of the keys to the kingdom when it comes to a lot of sensitive accounts, driver's license numbers, full name, address, cell phone number, mother's maiden, relatives, things like that. Anything you can think of that would be useful to a cyber criminal was leaked in this breach. But this is beyond just a kind of a normal large breach. These companies play, the three companies actually, Equifax, TransUnion, and Experian. These are the three big credit bureaus. They play a central role in determining whether you and I get a home loan, get an auto loan, get a credit card, what interest rate you pay. The data that they have plays a vital role in helping banks and insurance companies and others make those decisions. So as custodians of some of our most sensitive data, there's a broad-based belief that these companies should be held to a higher standard. So for Equifax to lose, effectively, data on half of all Americans, 143 million accounts plus several 100,000 credit card accounts, it's going to turn the heat up on this company and the two others in its industry, to really prove that they are safeguarding our data to a higher standard, than the normal web app company that you might interact with. But what I want to talk about today, given that background, which many of you have probably already heard so far. What I really want to do today is talk about, what should we do as consumers? We've talked about what we know about the breach, but there are some really practical things we can do as consumers, and hopefully my advice might be a little bit different than, maybe some of the advice you've heard. I come from the perspective of I cover cybersecurity. I talk to hackers every day. This is the world that, I kind of inhabit through, being a journalist covering this space. And through that, I've learned some interesting things about how hackers actually use stolen information that I hope I can impart to you all. And again, if you're just joining us, please feel free to leave comments in the comment section or questions. We're going to get to as many of those as we can as the show goes on. First thing I wanted to show you that's really important to note is Equifax suffered the biggest breach in its history, one of the biggest breaches in corporate history. But I want to give you a sense of what the actual impact on this company might be, because I think there's a misperception about how badly companies are damaged by these breaches. There's a perception that this could be kind of an existential crisis for Equifax. Certainly it could, but history doesn't bear that out. The first slide I want to show you, just very quickly, these are the stock charts. We're Bloomberg. We love stock charts of the three main companies I just mentioned. The big blue line, that's Equifax. You can see, in early September, they announced the breach, the stock drops. It's dropped like 33% or more so far. The other two lines are Experian and TransUnion. Purple line is Experian, green line is TransUnion. You can see, they took a little hit from the news, considering that, maybe an attack on one is an attack on all, but they haven't really suffered. Equifax has suffered the most. So you look at this chart and you think this is going to be a disaster for the company. Certainly it's going to be expensive for Equifax. But when it comes to who's protecting your data, I want you to know how little these companies actually suffer when they get breached. It's a really important topic. This This is the stock chart for Target. 2013, Target Corp announced one of the biggest breaches at that time in corporate history. It was the theft of more than 40 million payment card accounts of customers of Target stores. You can see what happened. I mean, the stock crashed. The stock really took a nosedive. But then see what happens. This is the rule of thumb that I think is a kind of a dirty secret of cybersecurity that not a lot of people talk about, but I want viewers of this show to be aware of. Target has completely recovered. Target spent more than $100 million the last time I looked, on remediating that breach, on buying new systems, on paying out lawsuits, things like that. But in terms of the market's perception of these companies, it takes 2 or 3 months, typically. And a company, even with a massive breach, will recover. So I want you to keep that in mind as we talk about today, what can you do to protect your data? Because imagining that somehow Equifax is going to go away, the big bad data storage company, is going to go away, that's just very, very unlikely to happen. Again, look at this stock chart. Equifax takes a nosedive. You can learn something from history of what actually happens when a company is breached. They tend to rebound pretty quickly. So with that history lesson done, I'm going to get to a couple of questions here that I think are going to answer some of the topics that I wanted to address today. We've got a lot of questions, and I'm going to rip through as many of them as I can. First question here, would purchasing LifeLock or something like a security protection service be worth it now? Here's why I like this question. Everybody gets breached. Everybody gets these notifications in the mail. Your credit card was breached. Your bank account was breached. Your Experian account was breached. What companies do in those cases is they offer a year or two of free identity theft protection services. It's not out of the goodness of their heart. This is a legal liability shield. If they are able to offer you identity theft protection for free, you are not able to prove, or it's a lot harder to prove, damages from the breach, because the company can say, hey, we offered you protection, you didn't take it, that's not our fault that you got impacted by this. So it's a legal maneuver. Let's not dance around it. However, that being said, my advice to people is take every free identity theft monitoring service that's offered to you. As long as it's legitimate. There are several major services that do this. But my belief is, why pay for something when these companies are giving it away for free all the time to protect themselves from liability? All Clear ID is a major identity theft protection service that many corporations use when they're in this kind of situation. My kind of gripe with Equifax is making people sign up, not making, but encouraging people who are victims of this breach to sign up for its own identity theft protection service. Now, it's a very deeply cynical move. Equifax can certainly account for these things, and that it's a lot cheaper for them to offer its own service than paying for a third party. However, the trust in Equifax to safeguard your data or to protect your credit, your credit report after it just lost it, it's a very cynical move. That being said, however, I encourage people to take these freebies when they're offered, because you can ride for years, potentially forever, on these freebies, and I think it's just a really great value, and you don't need to pay for a separate service. Next question here is, Equifax website says I may have been affected. How do I know for sure? My response to that is, don't trust the Equifax website. There have been a lot of people on Twitter and Facebook showing how that site doesn't really know what it's talking about. People have entered like last name Trump and last 6 digits of my social security number, 1, 2, 3, 4, 5, 6, and they've gotten a response back, hey, you may have been affected. Don't assume that that website is telling you the truth. Knowing what I know about how these companies respond to breaches, it is, it's kind of an all hands on deck situation over there. The company at this point may still not have a full grasp of what was taken or how, and if the data was accessed, by whom, things like that. Assume that you were affected, and if the company allows you to sign up for, again, its year of free credit monitoring, some security professionals may, give me grief for this, but I say, go do it. Just go sign up. There's very little downside. The company already lost your data. I mean, the risk that they lose it again is not that much worse for you than the very first breach. So sign up for the free service. That's generally my advice. Next question here is, can I just do nothing and hope I wasn't impacted? You can. That's actually a really bad strategy, and here's why. You'll hear a lot of security professionals talk about, well, assume that you were breached, like I just did. Assume that you were breached and kind of take that as your proactive stance in life when it comes to data breaches. My advice is, in response to this viewer, the only way I would say that you should do nothing about this is if you already have a pretty good credit monitoring identity theft protection service, ideally from one of these previous breaches that offers it to you for free. Again, why pay for something when you can get it for free from companies that are trying to protect themselves from liability? Doing nothing, if you don't have any protection, you're just setting yourself up for a world of hurt. You got to have something. Companies are giving these services away for free. They're all getting breached. Might as well take advantage of it. So don't do nothing. Do something, but you do have lots of options, and it doesn't have to be Equifax's own ID theft protection service. Again, there's All Clear ID, there's LifeLock. You pick your flavor of service. Next question here is, we're getting a lot of great ones. Really appreciate that. Keep them coming. I was affected. What should I do right now? First thing you should do, I'll give you advice of what not to do. In my view, you'll hear a lot of people say you should put a credit freeze on your account. Now, let me give you the pros and cons of a credit freeze. A credit freeze is really great if you suspect that what the people who stole this data are going to use it for is credit card fraud, is financial fraud. We don't have any indication that that's what these criminals were using it for yet. There are some signs they may have been trying to use this, or that the motivation for the attack may have been to try to acquire information for financial fraud, but we have seen zero evidence that they have tried to sell this data on the black market. We've seen zero evidence that certainly that's been used on the black market. So a credit freeze only protects you from fraud against your financial accounts. There are all other kinds of dastardly things that criminals can do with this information, and a credit freeze, it's a big thing if you're in a phase of life where you are buying a home, you're buying a car, you're trying to take out a credit card, you're trying to take out a student loan. Like all of these things, it is effective in blocking new credit accounts being taken out in your name. However, in my experience, I find that in general it's more hassle than it's worth. And here's the reason why. They give you a PIN code. They give you like this short PIN code that you can use to deactivate the freeze. If you lose that PIN code, you're in trouble. Like getting that deactivated without the PIN code is a nightmare, because the companies assume if you've set the freeze, you're a victim of identity theft, and anybody calling them is going to be pretending to be you. So what I say you do, again, sign up for these free credit monitoring services. That's kind of your best bet, and check your credit report. Just check your credit report, not for somebody from this breach using your data, again, for fraud, but for somebody from a previous breach. That's the value of these breaches, in my view, is it gives you free visibility into what somebody from a previous breach might do with your financial information. And what's left unsaid in all this is, what about the other forms of fraud, against individuals that are not financial and that would not be captured by a credit check? Those are much, much harder to detect. Things like medical identity theft. This is a big problem, in a number of hospitals where people get medical care, under other people's names. And the problem there is, if those bills go unpaid, those bills go to you, the identity theft victim, not to the perpetrator. Those are much, much harder problems. And again, credit reports generally don't capture those. They capture only when those bills have gone to collection. How does something like this happen? How does Equifax not have a system in place to prevent this? Well, that is a question we are all asking ourselves right now. And here's what we know. Here are the basics of what we know about how this breach happened. Equifax confirmed last night that there was a vulnerability in the software that it uses to build its web pages. It's called Apache Struts. Apache is an open source software suite. Struts is the particular piece of software that it uses to effectively build web applications. There was a vulnerability in that software, a very critical vulnerability, that became public in March. And between March and May, hackers around the world were banging on websites that hadn't applied the fix. There was a fix issued in March as well. This was a critical time if you're running websites that you would like to patch those systems. However, patching takes a while. I mean, you can't just apply a patch to an entire corporate network and it's expected to break nothing. Patches break things. So that 2-month gap, we have no visibility into what Equifax was doing, but that was the entry point for these hackers. They were able to access a vulnerable web application, run their own programs. And here's the trick, though. A lot's been made about that entry point, and it's important, but it's far from the most important part of this breach. The most important thing is, how on earth did the attackers get from basically the open internet to the crown jewels of the company? What is the pathway they took from that vulnerable web app, the Apache Struts web app, into the databases that contain the motherlode of data for this company? Social security numbers, name, date of birth, age, address, previous address, all of that stuff. That information should be so closely guarded and so hard to reach that you should never be able to get there, even from a vulnerable web application. So for viewers of the show, I would urge you and caution you, you're going to read a lot of stories about the way these attackers got in, including ours. We wrote about it today. That is not the most important part of this breach. The question that we need to answer in regard to Equifax is, how on earth did they get from there to the crown jewels? And Equifax hasn't explained that, but the answer is going to be very revealing. As we go through this, again, we love these questions. Please keep them coming. If you're just joining us, we're talking about Equifax and its massive breach that was announced about a week ago. 143 million user accounts, consumer accounts, you don't have to be a user of Equifax, were breached. We're talking about what exactly you should do. We're getting some great questions, so please keep them coming in the comment section wherever you're watching this program. Next question here is freezing your credit bad for your credit score? Not as far as I know. I mean, the industry has evolved to the point where, everybody understands that data theft can occur through no fault of your own. So as far as I know, and I'm not a credit score expert, I should say up front, but freezing your credit score is a pretty common thing. And it can be a prudent thing, especially if you're elderly, especially if you're not planning on taking out any major loans, you're not going to buy a house, you're not going to buy a car. If you're going to plan to be credit-free for a while, putting a freeze on your credit score really doesn't hurt you in any major way. It's only a hassle if you're going to go apply for a new credit account, and it's a hassle for the hackers to get around. But so it may not be bad for your credit score. However, like I say, it could be a hassle if you lose that magic PIN code that they give you to unlock that credit freeze. So if at some point you decide to take a student loan or a car note or something like that, and you don't have that PIN code, and this happens all the time, you're going to be in trouble, and it's going to be a hassle. Better to set up, one of these identity theft protection services that are given to you for free. Set up a fraud alert, monitor your credit account, your credit report. These are kind of basic hygiene ways to protect yourself. And most importantly, don't freak out about this. Your data is stolen all the time. And that's not me being cynical, covering this industry for over a decade. This data, a lot of this data was already out there. It may just not have been out there in one lump sum. So don't think that all of a sudden, just because Equifax was breached, that you're suddenly vulnerable in a way that you weren't before. The unfortunate truth of cybersecurity is many of us, most of us, all of us were already vulnerable. This just makes us even more vulnerable. So don't freak out. There are things that we can all do to help. Good question here. So if you can't trust the Equifax website, how do you find out if your info was taken? Earlier in the show, I mentioned that if you go to the website that Equifax has set up to determine if you were a victim of this breach, it produces really random and kind of nonsensical results. Some days it'll tell you were a victim, some days it won't. And people have documented this pretty extensively, on the internet. I would just assume that you're breached. And if the system allows you to sign up for the free ID theft protection service, and again, a lot of security people might, kind of criticize me for saying this, I say sign up for it. Yes, it is committing to a product of the company that just violated your security and violated your privacy. This is not excusing any of that. This show and these pieces of advice are all about getting the best value for you and your family, and having a base level of ID theft protection and letting these companies do it for you instead of you checking your own credit score and doing all the monitoring yourself. That, in nobody's world, is that a bad thing. But again, Equifax does not get any PR points for making victims of its own breach sign up for its own ID theft protection service when many third parties, are available that might look better. We've got some other great questions here. Before we get to them, I want to show you a couple other things that I think are really interesting. So we talked before about how Equifax's stock has taken a nosedive, down more than a third, based on this news. And then also how a great case study from history is how Target Corp, which in 2013 had its major breach of over 40 million payment accounts. The lesson here being company stock tends to recover even after major breaches, so don't expect Equifax to go away anytime soon. A very cynical set of slides, to be sure, but this is just the truth of how Wall Street views these breaches. Here's something else I wanted to show you. There was another company that also had a major breach, a while back as well, and that was Google. Google had a major breach in 2010 that it attributed or it blamed on the Chinese government. it said its servers in China were hacked, allegedly by the Chinese government. And some reporting came out after that indicating that what the hackers got was not just data on dissidents that the Chinese government might be interested in, but also law enforcement databases about who the U.S. government has asked Google or required Google to monitor, who might be Chinese spies or the U.S. suspects might be Chinese spies. Really damaging stuff. I mean, that is like some of the worst stuff you can get from a company. Here's the stock chart of the Google breach, again, back in 2020. Again, this is yet another data point that when companies suffer a breach, and again, Google's breach was much worse than the public generally knew, and it took a long time for this information to come out. Google, of course, recovered. Google is not one thing. Google is many businesses, that are very valuable, and Google stock recovered as well. So the point of these slides, again, is to say, let's not just assume that Equifax is going to go under, or these investigations that are mounting are really going to do much to the company that it hasn't already been done. I just think that's a really important point as we think about what are the consequences for these companies, and the consequences will, in my view, will not be borne out on Wall Street. That's my personal view. Another question here. Again, keep them coming. We like these questions. Equifax executives knew about this months ago, right? Why did they only just reveal it to the public? Okay, implicit in this question is this idea that the moment a company learns about a data breach, it should immediately disclose it to the public. I'm not of that view. Most people are not of that view, and here's why. It may seem like that would be the prudent thing to do. Immediately alert the public and tell them, hey, we've suffered a major breach. We're trying to figure it out, but until then, this might be a really serious problem. A couple of problems with that. When a company discovers a breach, they don't just shut everything down automatically, the way that some of us might do if our personal computer is breached or something like that. Companies have to call in experts. In this case, they called in an independent, cyber forensics firm, to help with their breach response. And what those folks do is they come in and they watch the hackers. They don't just flip the switch and shut everything down. They watch the hackers and they try to figure out where have these attackers gotten, what data have they gotten, and most importantly, when we do want to turn out the lights on these guys, how do we do that in one fell swoop? They call it an expulsion event. That's the term of art in the cybersecurity universe, an expulsion event. And you have to be really good at those things, and companies like Mandiant and CrowdStrike, and others are really good at those. What you have to do is you have to make sure that when you expel the hackers from your network, that they're really gone. That takes some time. And simply figuring out what data did the hackers access, that takes a long time. That takes weeks or months, or sometimes companies never know to the fullest extent possible what hackers actually accessed. And the reason being, there's a technique called full packet capture in technology. That is, companies, big banks do this all the time. They have technology to capture every single activity that happens on their network. That's a lot of data if you're a big company like Equifax or a big bank or whomever. So companies generally don't keep that data for very long. And we don't know if Equifax was using that technology, but let's just assume that they were. The biggest banks that we've heard of, JP Morgan, and others, keep that data for maybe a month or two. Again, it's really expensive to store all that data. So if it's beyond that time frame, reverse engineering and figuring out, where these attackers went without that full packet capture data is very, very hard. So you have to make educated guesses. You've got to figure out, this attacker was on this machine. Well, did they grab the 143 million social security numbers stored in some spreadsheet on that machine? Or did they not know that was there? Did they miss it? Like, hackers are really good at covering their tracks. So investigating and interrogating these attacks, it takes a long time. So that's why companies may take a few weeks or a few months to disclose something like this. The bigger question, though, is Bloomberg published a story right after this breach came out. There was a trio of senior Equifax executives that sold millions of dollars worth of stock just 3 or 4 days after the company has acknowledged it discovered the breach. There's a big question there, and I know Congress is going to look at this, and regulators are as well, is did those individuals know about this breach and dump their stock? The company says they didn't. That could be true. This stuff may have not percolated up in that time. These were very senior people. However, if there is evidence, and a big if there's evidence that these individuals knew about the breach and dumped stock, again, outside of their normal sale schedules. That's the key there. This was not on some pre-scheduled sale. That would be a big problem, but we don't have evidence of that yet. It's purely circumstantial. Do you think people should be compensated if their data was stolen? especially because Equifax is paid by creditors. You cannot opt out. I love this question because this is something security people have been talking about for a long time. What is the value of your data? When you do a Google search, Google is not providing that service for free. They have monetized your search. They've monetized that fraction of your day of you and sold it to advertisers. There actually are a couple of fun services that you can find for yourself online through Google. That there are plugins for your website that can kind of tell you, how much is this individual search worth to the company that you're transacting with. There is some non-zero amount of security professionals that have become pretty enamored with this idea of, if you get breached, you should pay people out the value of that data, not the value of the harm to the consumer, because that's a very different legal standard, but the value of that data to the company. It's probably not going to go anywhere. That's an initiative that doesn't have a whole lot of momentum or anything like that. It's just kind of an idea that I've heard security people describe. But there is this idea that this data is exceptionally valuable to these companies, and you don't consent to submitting it. They just collect it from public and private sources that do. So there's a sense of, how should I be remunerated for a breach that has potentially impacted my life? Fact of the matter is, we don't have a lot of recourse when it comes to actual cash payment. But maybe in the future there's some kind of model like that that makes companies more trusted. Last question here. I love all these questions. Thank you so much for writing in. What can these hackers do with this information if it doesn't include bank details? Okay, this is a really important point. That this information is your profile. Again, it is your name, your full name, your date of birth, your address, your previous addresses, your social security number, your relatives, things like that. This is all the information. This is the keys to the kingdom. It's not so much that somebody could then use that to access your existing bank account, although they certainly could if they figured out where you do your banking. But even more important is they could open new accounts in your name. So if you are a target of surveillance, if you are a target of hacking, they could certainly utilize this information to get more information about you. But the bigger concern is that this information could be used to open up new accounts in your name, especially for financial fraud. But also, and this needs to be said, we don't know yet what this attack was motivated by. We have some indications that it may be financial fraud, but that is far from proven yet. What we do know is that this information, if it were stolen by spies and not cyber criminals, has exceptional value. Like what spy agencies do when they steal information like this is they throw it all into a big hopper and they create these mega profiles of people where they'll take things like your consumer credit profile and add to that other data they've intercepted, like your web search history, like your GPS history, things like that spy agencies routinely collect, your telephone metadata history. So in that sense, if it's used by cyber criminals, it'd be used for financial fraud. You're really well served by signing up for one of these free identity theft protection services, including, again, the one Equifax is offering with all the appropriate caveats. If it's stolen by spies, you will never see this on the black market unless some of the hackers are kind of doing a side business, which does happen from time to time. And what's going to happen is this data is going to go into a black hole, and some foreign intelligence service is going to use it to accent and augment existing profiles on Americans, which, of course, is very unsettling as well. With that, our time is up here. I want to thank everybody for tuning in. We do this every week. Our usual time is noon Eastern. We had a special time today, but typically noon Eastern here, from the Bloomberg Washington, D.C. studio. Again, you can catch us on Facebook or Periscope or the Bloomberg terminal. If you want to catch us offline, please go to bloomberg.com/technology. There you'll find archived editions of the show. You'll also find a great web show by my colleague Mark Gurman called Gadgets with Gurman. He breaks lots of news on the Apple products. Check him out there. And you'll also see our podcast, which is called Decrypted, which I contribute to as well. On Twitter, I'm at JordanR1000. And again, wanted to thank you for watching. If you have any questions, please feel free to ping me offline. And we'll see you next week, and hope it was helpful.